Hey investors, thanks for joining me. I'd like to do a little question and answer session with questions from my Patreon members, and hopefully they will find it educational and maybe some of you will learn from it too. And of course, you're welcome to join us on Patreon. I put out a video each weekend where I show my current portfolio and focus list. And I put out a blog post or two each week, and I field some of your questions through the Patreon platform as well. And before we begin, let me just say that this is not investment advice. This is just for education and for entertainment. And I also want to remind you to check out my partner, Seeking Alpha Premium, one of the best fundamental analysis platforms on the web, where you can read all sorts of articles about stocks and look at all sorts of fundamentals. And with that, let's talk about a couple gaps on the Tesla chart. And just looking at my notes here, let's look at XRAY and ARRY, and let's look at HUBS, HUBS. And I had a question about my scanning process. So let me show you the only scans that I run. I run those on Marketsmith, and I'll talk a little bit about where I get my charts from beyond my scans, and then we'll see what time it is. I just want to do this for about a half an hour. So first question, William Sanchez wanted me to talk about the gaps on January 26th and 4/20/23. So let's pull up the Tesla chart. Okay, gaps occur when the stock moves dramatically in price during pre-market or aftermarket, so then it opens up at a dramatically different price than it closed. And there are a few different kinds of gaps. There are breakout gaps, where a gap breaks out of a base. There are continuation gaps, where a stock breaks out midway during a move. There are climax gaps, where a stock makes a climactic gap to end a run. And there are gap downs. And gap downs are always bad, and the severity basically depends on the depth of the gap and the amount of volume. So the gaps that William is wanted to talk about are this one right here, January 26th, and this one right here, which was on 4/20. But we can look at a few other gaps. Now, it's always easy to label these things in hindsight. Figuring out what they are in real time is, of course, the trick, and what separates the pros from the amateurs. So if we look here, here's an example of a climax gap. Now, this run was only a handful of days, so this isn't really particularly significant. But basically, when a stock is running up and then it gaps, that is a caution that the run-up might be complete. So oftentimes when you have a prior run-up and then a gap and then it undercuts the gap, that is your cue to get out. Here we have a little breakout gap where we had a little bit of VCP action and then a breakout. Breakout gaps are good. If they're small like this, I like to buy right into them at the bottom of the gap. If it's a really large gap, if it's a strong market, I'll try to play the gap and put a stop at the low of the day, or just a little bit into the gap. In a weak market like this, if the gap is more than 1% or 2%, if it's much bigger than this on a breakout gap, I'll stay away from it, because more times than not in this kind of market, the gap ends up filling. Here's an example of a gap to the downside. These are always bad. When you have support and the stock breaks below support, that nearly always signals that the base has failed and things are going to go lower. Sometimes, as we see here, much lower. So what you can do is you can sell all on the gap, or you can wait until the gap confirms, that is when a bar moves beneath the gap, which would be this day right here. So maybe you go half here, sell half, the other half here. which brings us, while working down the chart, here we see this V bottom. Here we see this bullish engulfing day and a little gap to the upside, which I suppose we could call a breakout gap in hindsight. And here's a continuation gap. So this was one of the gaps that he was asking about. So this made a decent run from 100 to 145. You've got all of this immediate supply to the left. These are all, so you kind of have a double whammy. You have a bunch of trapped buyers who are sitting on a loss who want to get out. And you have swing traders who made a really quick profit who want to get out. Therefore, when we get a gap up like this, I would have sold into it probably half. Now, in hindsight, that would have been too early, but we have to manage risk in real time because I would have been worried about these guys killing the rally. In hindsight, probably this doji candle was our signal that the rally was over. Then we got a little bit of VCP action, and then this big gap down, which was the other gap he wanted to talk about. And this most certainly, I'm actually doing a long-term hold. I'm trying to do a 10-year hold on this because there's such an asymmetric, there's a chance if they solve full self-driving that Tesla shares will be spectacularly valuable. You can ask Cathie Wood about that. But if you are not doing a long-term hold, then this gap down is definitely telling you this is a sell signal, right? If you bought anywhere in here, this is a sell because you've broken beneath support and now it's confirmed. If I had bought anywhere in here or down here, I would have sold all of my position here. Now, best case scenario, it gets support. This gap here, if we draw a box here, let me just draw the box. This little gap may function as support, and best case scenario, it bounces off, slides sideways, and then continues up. But let's say it does turn up. Now you've got all this immediate supply to deal with. So if I'm swing trading this thing, I am definitely out. Okay, here is a question from David Taylor. He wanted to hear about X-ray. What is X-ray? Hold on. X-ray develops a broad range of dental supplies and products. Numbers are certainly weak. Look at that. Although it is a profitable company and it does have a very small dividend. So this is what Mark Minervini calls an early turn. The downtrend is probably over and it's just early in its turn up the right side. Now, in brief, he avoids these charts, and I do too. You're just too early. You want an established uptrend. 98% of the stocks that made the biggest moves were in established uptrends of at least 4 months, meaning they were above the 200-day average for 4 to 5 months, and the 200-day is pointed firmly upward. As you can see, the 200-day is just starting to turn, and you're only you're only 3.5 months into it. And you have, look at all this immediate supply. Just like I was saying with Tesla, you've got these guys down here thinking about taking profits, and you've got all of these trapped buyers tempted to sell at break even. That causes volatility and steep pullbacks, and if you're trying to control risk with tight stops, you are gonna get stopped out. And if you look at this 5-year chart, look at all of this supply that it's gonna have to fight through. I like to buy shallower bases where I don't really like to join until we are much closer to an all-time high, like maybe at least halfway up. So in this case, I would say visually, maybe right in here, maybe when it got above 50 or so, and the uptrend was much more firmly established, then I would entertain this. We don't want the lowest price, we want the right price. And by the right price, we mean we want to get in when the stock is moving the fastest and the most expeditiously, safely, without bucking us off the horse, so to speak. And there are a bunch of beaten down stocks making these early turns. Personally, I'm just going to watch them and wait a couple months on them. And don't get me wrong, I'm not saying that a trade in X-ray won't work. It's just that the probabilities of being able to stay in it long term are lower. So you either got to be really nimble and try to swing trade it, or you can trade it, but just know that your odds are going to be not as good. What's the other one you wanted? Let's see. Oh, ARRY. Okay, ARRY, ARRY Technologies designs and manufactures ground mounting systems used in solar energy projects. The solar industry is pretty hot right now. FSLR is doing well, MAXN is doing well, Enphase is just starting the right side. This stock has been flat for quite a while. The numbers are really big. You're in triple-digit earnings and high double-digit sales. Gross margins improving, so the numbers look really good. And of course, that's good to see. It's a profitable company and no dividend, I would think. Yeah. This is a recent IPO, and we kind of see a head and shoulders bottom forming, don't we? Here's your shoulder, here's your head, here's your shoulder. So we could draw, where's my line tool on this? Oh yeah, I found it. You press Control. So we draw a line across the neck here, and when it breaks the neckline, that would be our Q. Now we've got some supply here, but this is pretty far back. We're not nearly as deep as X-ray. Let's look on it. Let's look at the chart on stockcharts.com. Wow, I'm having trouble speaking. Yeah, so here's what we were looking at on Marketsmith. Obviously, we would rather this supply not be here, but this is pretty far back. This was way back in early 2021. And as you can see on the 1-year chart, we see no trap buyers. Now let's just draw in the base here. So if we get out our line tool, so there, we can draw a line there, we can draw a line right there. And this is kind of a sloppy ascending triangle, which is a bullish pattern. You got a prior uptrend, you got an ascending triangle, you got a wicked little shakeout here. That's good. So now the market is really dicey right now, and I don't know that I would keep things really tight going into the Fed meeting May 3rd. But in theory, when this break clears all of this supply in here at about 22.5, I would put on a half position, and then it would probably make a handle, and then it would break this next level, and then I would complete the position. I might hold off and do that after May 3rd, but if you wanted to try that with a very small position, you certainly could, and then you would put your stop. Ooh boy, that is pretty wide. So we don't want to be putting you really would want to be beneath this 200-day and all of this congestion, but we do not want to do a 16% stop. So what we want to see happen is we want to see it tighten up and give us some really tight price action. Like see this price act, well, that's still 8%. Maybe some price action like this, so that when it breaks out, we could put a little 5% to 6% stop right about like so. Those are my thoughts on ARRY. Okay, Miko Sako wanted to know about HUBS, HUBS. This is another one of those early turns. On the plus side, it does have a good relative strength of 94. Earnings are coming up in 8 days, so you want to be careful about buying in front of earnings. Making a lot of money. Good trend with the yearly EPS. And let's see. The income has a really nice trend, plus 91% last quarter. And sales are strong. Gross margin is good. So fundamentals are good. Certainly this is a well-performing company. PE ratio is a sky-high 148. Yikes. The problem is, like what was that one that we just looked at earlier? X-ray. This is just an early turn. It's just now turning out of its downtrend. You've got all of these trapped buyers to the left, and you've got these swing traders sitting on a fat profit without much of a pause. So this is risky. It could work, but two-time U.S. investing champ doesn't play these early turns. He waits for 4, usually 5 months of an uptrend, and for the 200-day to be pointed very clearly up. Here we've got 1, 2, just about 3.5. So we're just early on this one as well, and we're still really low in this base. We want to get in the upper half of this base. So I'm going to pass on this one for now, even though I agree the fundamentals are tantalizing. Like I said, you can still play it. You can try to nimbly swing trade it, or just do a smaller position, knowing that it is more prone to volatility and failure. It is getting support on the 50-day, and that'll work until it doesn't. Some institution must be buying on the 50-day, and you could join them, buy it when it bounces off the 50-day. But I'm going to take a pass on that one for now. Okay, now, one second. I'm going to mispronounce this name, but one of my Patreon members, 𝐿𝐼𝐾𝐝, I'm not sure, I apologize, wanted to know about my scanning process. So I only do 3 scans, and I do them on Marketsmith. I do them as often as I can, definitely every weekend and more when I have the time. And here is exactly how I do it. And if you don't have Marketsmith, you're going to have to try to emulate these scans as best you can on a different platform. Or, of course, if you subscribe to my Patreon, I will show you, feed you the best of the results. So what you do, and if you could like this video, by the way, if you haven't, that'll help get it in front of more people. So here's Marketsmith. It's a subscription investment platform. You click on screens, and actually, you don't need to do that. Sorry, I forgot. So open this up down here. So you go reports, and you go stocks. Open that. You go technical. And here we see the Minervini trend scans. So I do 2 of them. The first one is the 5-month scan. This will show me the stocks that are in established 5-month uptrends, like I was telling you about. So if I just click on it, now here's all of the stocks, and I can organize them by relative strength, like they are right now. The number 1 is RETA. I actually own that one. Or you could organize it by composite rating, by market cap, however you wanted to do it. And then what you can do, there's Wingstop. What you can do if you're on Marketsmith is you can, what did I do? You can just click through them with your space bar, and you can sort them like that visually. Or what I like to do is I export them into an Excel document, and then I move them to stockcharts.com because I like the charts at stockcharts.com better. So I do the Minervini trend scan to show me the stocks in 5-month uptrends. And I do the Minervini trend 1-month scan. These are stocks that have just begun the uptrends. Now, I was just bashing on early turns, and I don't play early turns except for power plays. That's when you have dead price action, and then you have an increase of at least 100% over 2 months, and then a pullback of less than 25%. So I go through and look for power plays. This might be a power play, although it looks like it came down too far. I'd have to measure that. But so I would just go through these, and I would look for power plays. And first I would sort them by relative strength. I forgot to do that. And yeah, and I would just look for power plays or anything that looks promising. Now this is under $5. I usually don't play stocks under $12 or so. But a lot of these are just early, and so I might watch some of them. Like that would be worth watching. And what else? That would be worth watching, etc. So I'd pull some charts from here. Then the other one is the code 33 screen, which Marketsmith doesn't have this one built. You have to build it yourself, and I'll show you how real quick. So you open up screens, and I already have, once you build it, you can bookmark it. I've got it right there. But let's make a new screen, new stock screen. Let's just call this test screen. Now here's how you set up a code 33. You go to earnings. You want to see earnings acceleration the last 3 quarters. Then you go to sales. You want to see sales acceleration the last 3 quarters. And now it's telling you how many stocks are in the screen. It went from almost 10,000 stocks to 493 to 224. And then you go margins. And we find, let's see, where is it? Oh, duh, it's right at the top. After-tax margin acceleration last 3 quarters. So 3 attributes going up 3 quarters in a row. That's what Minervini calls a code 33. That gets us 53 stocks. View screen results. Here they are. Click on that. And now we can sort them by relative strength again. And we can just cycle through with the space bar. SB manufacturing, that looks strong. All these are going to look really good. AGYS. ALGM, boy, that just broke hard. That's too bad. TME, that one just broke hard as well. And I just visually go through these and pull the charts that look good. That actually looks pretty good. That one's in a base. That one's sliding sideways, etc. And I usually get a few from here as well. Then the other places I get charts are not from screens. They're from Minervini's private access, and 𝐓-𝐒𝐇𝐍𝐍𝐵, who was the U.S. investing champ in 2000. When was it? 20? Or was it 21? I can't remember. Various friends on Twitter and personal friends. And I throw them all together and pull the best of the best and buy them and put them on my focus list and show my Patreon members every weekend. It's $10 a month. I think, well, actually, we got 10 more minutes. Let's look at a couple more charts. So Miko also wanted to hear about Floor and Decor. FND, this one had a nice run in 2020. I did own it for some time during 2020. Let's look at the monthly real quick. It had a strong run for a couple years and has pulled back hard with virtually every stock. And so we see it as making a double bottom here, right? Here's an Adam and Eve double bottom. It's getting whole number resistance at 100, and we had some resistance that happened right there. So here's a resistance line. Let's see if my line tools, yep, right there. Definitely have some supply here, but it's pretty far back. That won't even be on our 1-year chart. Earnings are in 9 days. Probably don't want to buy ahead of earnings in this market. In a raging bull market, that's not a bad thing to do. It can be a good thing to do. In this dicey market, gosh, I don't know that I'd risk it. What else can we say? Profitable company, no dividend. Pretty nice looking numbers here. Strong earnings, decent sales, gross margins improving slightly. Let's pull it up on stockcharts.com. Yeah, so here's this big double bottom. Let's draw a line across here. So we got some immediate supply right here. We do have some VCP action, large, medium, smaller, smaller. So that's good. So this is one of those borderline cases. If the market was strong, I would go for it. When it broke above 100 again, we got a little bit of supply. I'd probably wait for it. You know, at this point, I would probably wait for it to get above 101 because you got this supply here, you got all this supply here, and then you could take a stab at it. So yeah, that would be my game plan. I would want to see it come up to 101 and build a little bit of a cap here and then break out with conviction above 101. Yeah, so if you like the fundamental story, you certainly could do that. It is a little bit of a lower chance of success because of that supply that we talked about on the weekly chart. We see all this supply here. But certainly if the market improves post May 3rd, and I really am hoping and think it will, then like I said, when it moves above 101, that would be a decent place to try it. The uptrend's a little early. Let's see, 1, 2, 3. I mean, you're almost at 4 months. 5 months would be better, so you're just a little early on this thing. And here's another one he was interested in, CSIQ. I don't really like this one at this particular time. It's really quite flat still. You got a little bit of a flag here. You've got some powerful buying and price action here, obviously. But let's say it breaks above 41. You've still got all this immediate supply. And then you've got this supply right here. In a really strong market, I might think differently. But in this market, I'm really not too interested at this point. It's just now starting its uptrend. Let's look at the fundamentals. So in the weekly chart, it's just now starting the right side of the base. I'd like to see it get... Is my line... There's my line tool. I'd like to see it get right above here. And then when it really starts that right side of the base, maybe we could get it here in the high 40s, low 50s. Let's look at the fundamentals. Like a lot of these solar companies, the future guidance is very big, which is good. No dividend, and the fundamentals are looking good here. Triple-digit earnings, strong sales. Margins are falling off a little bit. That's not good. Earnings don't come out till May 18th. I would just give this one more time. Of course, I would give this one more time. You certainly can try to play it, but I think it needs more time to develop it before we can do a low-risk entry. Another one that was asked was FLYW. And this is another one that I think it needs more time. I think the downtrend is over, but boy, it is sure bucking Bronco right now. You got all these trap buyers, like we've been saying. You do have a head and shoulders bottom, shoulder, head, shoulder, draw line tool, draw a line across the neck. What do you even do here? I suppose you could do something like that, but look at the volatility there. How on earth are you going to do a tight stop and stay in this thing? Let's draw a few more lines. So you got a really messy base here. You have some semblance of a handle that's all over the place. You got a pop and squat here. You have a little bit of a cap pattern. It is calming down a little bit, but the uptrend has just started. You're just 2 months into the uptrend. You've got this trap supply here. I'm going to pass on this one for a couple months. Now, of course, it can work. You can try to swing trade it, but the probabilities are less. I think I'm going to wrap it up there. I'm going to try to do a Q&A with my Patreon members once every week or two. So I hope you got something out of this. Let me know if you have any questions or comments. If you're interested in joining my Patreon, there's a link in the description and the comment sections. Don't forget to check out Seeking Alpha Premium. Let me show you that real quick. Here's the platform. You can do model portfolios. Gosh, look at that, all that red today. And then you can zoom in on a particular stock. Here's Luckin Coffee. Here's a wild one. You can read analysis articles, news headlines, and here's all the fundamentals you would ever want to see: valuation, earnings, profitability, momentum, etc. There's a link to Seeking Alpha Premium in the comment section and description as well. Take care, everybody. Let's just ride out this week, and let's hope for a character change with the Fed meeting on May 3rd. That's it for me. See you later.